The following program is sponsored by Adams Financial Concepts.
About money, a different approach to investing you won't hear anywhere else. Your host, Mike Adams, is a registered investment advisor and works with investment portfolios exceeding over $100,000 in net worth and has a proven track record of managing long-term investments surpassing the markets in the long term. The information shared on the following program is for educational purposes only, and any investment advice given may not be suitable for all investors. And now, here's Mike.
It's Friday afternoon. Now, on Sundays, if you ever watch Meet the Press, Chuck Todd closes the show by saying, if it's Sunday, it's Meet the Press. I just want you to know, if it's Friday afternoon at 3, it's about money. And like Meet the Press, if you can't make this show, if you can't hear the whole thing, you can find this show on the website, adamsfinancialconcepts.com. You can hear what was said. So even if you don't hear the whole thing, you can pick it up there. If you don't hear any of it, you can pick it up there. Today, I want to talk about a couple things. One, do you think Russia's going to break up completely? I'm going to talk about that later in the program. But I want to start. There was another article in Investment News. There's been a number of articles with the same pattern talking about lowering client expectations, getting clients to believe that returns in the stock market are going to be lower over the next decade. They're going to be pretty lousy over the next decade. Now, I happen to disagree. I happen to believe returns over the next decade are going to be very, very good. I believe we're in a bull market that is probably the best secular bull market of our lifetime. It's going to be better than the 1982 to 2000 bull market. I believe that. I believe there's reasons for that. But first, before I get to that, I want to talk about what this article said. Investment News, July 31st. They talked about worldwide and U.S. returns going to be very low. And the reason they said that is, number one, interest rates are low. Interest rates are going to have to be raised over the next decade. I think probably this September the Fed will start to raise rates here, but worldwide interest rates are going to rise. And generally, interest rates rising are negative for stock markets. Secondly, inflation is low. Inflation has been running at less than 2%, sometimes less than 1%. And that's not only true here in this country, it's true worldwide. Inflation is low, and as inflation picks up, that's a negative for the stock market. Thirdly, debt levels are very high. Compared to where they were in 2007, there's been a lot of debt that's been added. The U.S., of course, $19 trillion. Europe's added debt. China's added debt. Countries around the world have added debt, so debt is very high. And debt added that way, they believe is negative. I'm not so sure that that's really true. I think you have to look at GDP versus debt, but even there's a question. Debt levels are high, no question. They believe that's negative. Fourthly, they say that monetary and fiscal tools, which are usually used during downturns, have been fully deployed. If we have a downturn at this time, there's not a lot of fiscal or monetary changes that can be done to boost the market again. Fifthly, they say valuations are really high. The key price to earnings ratio now stands at 18 versus a historical average of 15. So if you get back to the historical average of 15, that means the market has to come down almost 20%. You know, that means stock prices are 20% too high, according to historical norms, according to what they believe. They also believe, sixth, that worldwide commodity prices are low. Oil is very low. In fact, today oil hit the lowest prices it's been in 2015, the lowest price it's been since August of last year. And I'm going to talk more about that. That's coming later in the program. But gold is down. Iron ore is down. Copper is down. Metals, food, those things are down. And that's a negative. And, they point to the study that I've mentioned in the past, the Standard Chartered Bank study that talked about supercycles, when worldwide economic growth grew at a higher rate. That Standard Chartered Bank study showed that from 1874 to 1913, world growth, GDP, grew at a higher than average rate. That was the first supercycle. It was one driven by the industrialization of the U.S. The second supercycle was one from 1945 to 1970 that was driven by the development of the rebuilding of Europe after World War II. The third supercycle, and most people agreed, and most people thought that this was really true, began in 2009 with the emerging nations and was going to be driven by the emerging nations. That's now been raised and questioned. That was what these articles are saying. Maybe that's not true. Maybe we're through that whole cycle. Against that backdrop, against what's going on, you have to look at the emerging nations and their stock markets. You have to look at the U.S. and their stock markets. But against that background, think about what's happened. In the last 30 years, just 30 years, we've had more people exit poverty than all the previous years of history. Just in the last 30 years, more people have exited poverty. I had a person that I worked with at one time that went to work for American Standard, building bathroom fixtures in China, making toilets, making bathroom showers. The people that worked in that factory had never, ever seen a toilet, a flush toilet. They'd never seen, or I should say a toilet with running water. They'd never seen a shower. They'd never seen a bathtub. And here they were making those products. Those people were subsistence. They were poverty workers. They worked a few years in that factory, and they suddenly became middle class. They were purchasers. They could buy things. That's what's going on. The forecast is that by 2030, 93% of the world's middle class will be in the emerging nations. There's nobody changing that. Even with all these questions that are developing about the questions about whether the supercycle is going to hold, they're not questioning what's happening with the middle class. That's happening. There's 2 billion people that still live in poverty. And you're going to hear about that with my guest today. It's a very significant number. And those people, as they become consumers, are going to power a huge economic boom. If you look globally where we are, right now, the global output is 8 times what it was in 1950. If you look at global GDP, 8 times what we were in 1950. In 65 years, we've grown 8-fold. If that continues, it'll be 17 times bigger in 2100 than it is today. An 146-fold increase in just a few generations. That is a supercycle. And yes, there'll be corrections, and yes, there'll be bear markets along the way. And yes, we're talking about countries which have done things like China. And last week I talked about China and mercantilism. If you missed that program, you should go listen to the podcast, because I think it's crucial to understand what's happening in the world and mercantilism, and what's happening with the growth of these countries. China, 40 years ago, an agrarian society, agricultural society, that in 40 years has become the second largest economic GDP in the world, second only to the U.S. What happened and why that happened, and what the problems could be and will be and are. Last week, it's centrally planned. The Communist Party owns everything. They're able to grow very, very fast because they can decide what resources are used and where. That was the program last week. But if you look at U.S. growth and stock market returns, we're not that different than we were in 1987. 1987, we were slow growth. We had to see, people didn't see where revenues were going to come. We'd had this big explosion in growth. From 1980 to 1987, the market had gone from 1,000 to 1,700. But people saw and looked at the Dow. If you look at the Dow in 1987, it was Boeing and Coke were added, but you had Alcoa, American Can, American Telephone and Telegraph, Bethlehem Steel, Chevron, Kodak, General Motors, International Paper, Navistar, Sears, Union Carbide, U.S. Steel, Westinghouse Electric. It was hard to see how those companies could continue to grow at the rate they had grown in the previous 5 years. They were not fast growers, nor were a lot of the other companies that made up the Standard & Poor's. It was hard in 1987 to visualize how we could have the kind of market that we were going to have between 87 and 2000. I mean, the market went from the beginning of 1987 at 1,700 to 10,000. Think about that. Over five-fold increase. We now are essentially the same place as we were in 1987 versus 1982. Today, we stand at 17,000, just under 18,000. It's been a very big growth, but there's more to go. But don't go away. We're coming to a commercial break, and I want to talk about this. It's important to understand. I'll be back after the break.
About Money will resume in a moment with Mike Adams on Business Radio 1300 KKOL. For more information, click on adamsfinancialconcepts.com.
Lots of people manage investment portfolios. Just a few can manage a successful portfolio and provide exceedingly great service to their clients. Here's Mike Adams from Adams Financial Concepts.
We believe the price you pay should be based on the performance of your portfolio and the quality of service you receive.
You know, Mike, it seems that a lot of companies subscribe to the one-size-fits-all mentality of investing. Does one size really fit all?
Not with us. Every portfolio that we manage is customized to fit each particular client's objectives and risk tolerance. We place our client's interests first in all portfolio decisions.
If you're looking for a home for your seven-figure plus investment portfolio, call Mike Adams of Adams Financial Concepts, specializing in creating and maintaining wealth for over 20 years. 206-903-1019. That's 206-903-1019. Or log on to adamsfinancialconcepts.com.
Now we return to About Money. There's more information waiting for you at adamsfinancialconcepts.com. Here again is your host, Mike Adams.
So I've started talking about some articles that are saying that financial advisors should convince their clients that returns are going to be abnormally low for the next decade. I don't believe that's true. I don't believe it's true. I went through the reasons why they said that. I believe there's reasons to believe that we're on the cusp of the greatest bull market in our history. You know, it wasn't that, if you compare this time to 1982 to 2000, that market that went from 1,000 to almost 14,000, by the beginning of 87, the market had actually stood at 1,927. The PE stood at 18. Remember in the first part of the program I said people were concerned about valuations because the PE was 18 and the historical norm was 15? You know, today we have a Dow at 18,000. We're up from 14,000 at the high in 2000. And we've got a long way to go. Yes, from the very bottom, if you look at 6,600 and whatever in March of 2009, we've come a long way. But if you look in 1982, actually 1979, the market hit a low of 790 and climbed to 1,000. So if you look at the 790 to 1900, not that much difference from where we are today. If you look, it was hard, however, to see the growth in the Dow stocks, which I mentioned. But if you look in 2015 March of 2015, you have in the Dow, Apple, Cisco, Goldman Sachs, Nike, Intel, Johnson & Johnson, Pfizer, Travelers, United Health, Verizon, Visa, Walmart, Disney, Microsoft. None of those stocks were part of the Dow in 1987. They've all been added since then. And many of those companies were large growth companies. You know, some of those companies did not exist in 1987. Microsoft had just gone public in 1986. Intel was a small company making semiconductors. You know, Cisco was not in existence. Walmart had just come into existence. McDonald's had just come public in 66 and was just beginning to show their growth. But many of those companies were new. They drove the economy. The old state companies that were part of the Dow, that people had a hard time visualizing how they could continue to grow, how people thought that they were overvalued. They were replaced by the newcomers. We're seeing that happen today as well. And I believe we're going to see it happen on a more regular basis. You know, the long-term bull markets from 2009 to today has been 76 months. But if you look at from the last correction, it's been 39 months. And during that time, the market has risen 57%. If you look at the 1950s, the bull market then was 146 months long. It rose 698%. 1980s, 134 months before the correction, it rose 435%. In 1990s, 135 months, 523. You know, we're looking at 57% since the last correction. That doesn't even come close to comparing to what's going on. And what we're seeing today is very evolutionary. Back in the 1980s and 90s, there was a growth of capital for new business. John Kenneth Galbraith wrote in the 1950s a book called The Affluent Society, in which he said that big businesses had the capital and the resources. And his argument was that small companies would find it very difficult to grow because they didn't have the capital. But at the end of the 70s, the beginning of the 80s and 90s, you had a sudden explosion of venture capital. It came into being. And today, if you look at where Silicon Valley, where that venture capital went, not at all expected back in the 1950s and 60s. But by now, those companies now have a valuation of over $3 trillion, driven by that capital, the venture capital. That was the driving force. But venture capital is very limited money. And today you can make the same argument looking just at venture capital, that capital is so restricted. But you know, there's a phenomenon taking place. There's funding that's happening for small businesses, not through the huge sums of venture capital, but through what I would call the shark tanks of Seattle, the shark tanks of Boston, the shark tanks of Chicago. In Seattle, there's a company called Keiretsu Forum. It's actually one of 18 chapters. Seattle formed in 2005. Through that chapter, they've raised $130 million for 200 companies, capital of $250,000 to $3 million. The Zeno Society, same kind of thing. Small companies come and present, and from those companies, they get investments not from huge venture capitalists, not the millions of dollars, but individuals who can invest $25,000 or $50,000 or maybe even more than that. But they're small and they're driven, and many of these companies are going to be explosive. You know, it doesn't count the online funding that's coming. Kickstarter, launched in 2009, has raised $1.9 billion from 9.2 million people for over 90,000 projects. GoFundMe, $125 billion from 13 million people. That's $1,000 a person. It's not huge money per person, but collectively, it means there's a funding happening. Many projects will die. That's true of businesses, even VC funded. And what's happening is not just in the U.S., it's worldwide, but a good portion is happening here in the U.S. Mike Markowski of Dynasty Wealth Management said there's going to be over 1,000 U.S. companies that will grow 1,000-fold. That means those companies, there's 1,000 companies that are going to grow to $1 billion in a very short period of time. Think about what the impact that's going to have. And some of those companies are going to be private. Some of those are going to be public. Many of those companies are just now being born. Some will be born next year, the year after, in 5 years. You know, we're just at the essence of the greatest bull market of our lifetime, and it's being driven. The capital is there. It's unusual compared to what was happening before, but the capital is pouring in. And yes, we're going to go through setbacks. Yes, we're going to go through corrections. Yes, we're going to have short bear markets. Yes, we're going to have flash crashes. Yes, we're going to have technology glitches. But over the long term, this market has the potential to be the greatest of our lifetime. It's a demand-driven. As consumers grow in those emerging markets, it's going to create the demand for the products we have here and around the world. That's why I disagree with people saying that long-term equity growth rates are going to be meager, are going to be abysmal. I don't believe it. I believe we're starting a time which is going to be one of the great times of our lifetime. To illustrate some of the things that are going on, I have a guest back. He was here before with another company, and now he's back with his new company, but I'm going to let him explain that. My guest today is Bert Hammer of HydroBee. Welcome to the program, Bert.
Thanks, Mike. It's great to be back here again.
So let's start with your background before HydroVolts.
I'm a marine biologist who got into international development, and I spent about 25 years around the world teaching industries how to be more profitable through better environmental management. We were teaching them that waste is a lot more expensive than they thought it was.
Hold on a second. Did we miss part of the introduction? We missed part of the introduction. This is Bert Hammer, the CEO and founder of HydroBee. He was on the program before. We missed some of that introduction, so we're going to start all over again.
Okay.
Welcome to the program, Bert.
Thanks, Mike. Great to be here.
So let's start with your background again.
I'm a marine biologist who got an MBA and got into environmental studies and then became a consultant for clean technology promotion for U.S. aid and other organizations around the world, helping industries make more money by reducing waste and pollution. And I spent a lot of time overseas. I've worked in 16 countries. I've lived in 9. And I've always had a very strong passion for both the environment and for doing good for people, because I got to see up front and personal how many people live in poverty that just sort of blows your mind when you're out there actually living there.
I'm sure it does.
And after spending many years overseas, I came back to Seattle, and at that time in Tacoma, the Tacoma Power Utility Company had decided to do a study of Tacoma Narrows, our big waterway here, to determine if they could make tidal power, renewable energy from the currents flowing back and forth with giant underwater windmills. Think of them that way, water mills. And because of my marine biology background and my knowledge of clean technologies and a lot of great connections locally, I ended up getting the job. So I spent in 2007 a whole year studying Tacoma Narrows to figure out if we could put giant turbines on the bottom of it and make enough power to run the city. The short answer is no. And it's a very environmentally sensitive area, so the idea of giant turbines spinning in the dark where whales are swimming was never going to really fly. But I became fascinated with the whole concept of micro hydropower, because the turbines that were being invented were things that could work in places that were safer. And here in Washington, we have a interesting phenomenon. In eastern Washington, we have huge irrigation canals that run from the Cascades down into the Columbia River. They're giant concrete rivers, and they're totally artificial, and there's no salt, and there's no whales, and no fish, and no boaters. And the water's just running downhill. So we said, let's take that tidal technology from the ocean, downsize it, and put it in these canals. So I started a company called HydroVolts to put turbines in irrigation canals. And I went through exactly what you described with the Seattle angel investment community, the Zeno Society and Kairetsu and others. I raised $3 million from 40 angel investors. I grew the company, and it was eventually acquired by some of its investors.
We're coming to a commercial break, so we will come back to that, and we'll come back to the new company because I think it's the most fascinating. It's tremendously fascinating. Don't go away. We'll be right back.
More about money coming up with Mike Adams on Business Radio 1300 KKOL. For more information, click on adamsfinancialconcepts.com.
Creating and maintaining wealth has been the specialty of Adams Financial Concepts for over 20 years. Every portfolio managed by Adams Financial Concepts is customized to fit each particular client's objectives and risk tolerance. The client's interest always comes first in portfolio decisions. Call Mike Adams today at 206-903-1019 or log on to adamsfinancialconcepts.com to check out their AFC performance. They welcome your review. That's adamsfinancialconcepts.com.
We're back with more about money. For details on what you hear on today's show, visit adamsfinancialconcepts.com. Now, here again is Mike Adams.
So I'm here talking with Bert Hammer of Hydro-Bee, and we are going to talk now about Hydro-Bee. What is Hydro-Bee?
Hydro-Bee is a company that's making a tiny turbine that is exactly the size and shape of a soda can. And it is designed. What it does is it takes energy from nature, any kind of nature, especially motion energy, anything that moves, and it converts it into electricity so you can have something to charge your devices with. And it's the size of a soda can because we want to make it reach 2 billion people who live off the grid, and Coca-Cola can get a can to anybody.
That's true.
It's a pre-existing distribution system, and that last mile is really important because, as you were saying, Mike, there's now this huge, biggest brand new market the world's ever seen, created in the last 5 years, of people living off the grid without electricity who are suddenly having cell phone coverage. And they all are getting phones, and now they're all walking around in that wonderful pose we have with our little USB cord in our hand, looking for some place to plug it in. And that's what we're trying to capture. There's 4 black swan events have happened in the last number of years that are really extraordinary, that suddenly have created this opportunity to create new company. The first of these black swan events is the development of the USB power standard. You know, if you think about it, we all have our phones, and all the phones in the world now run on the same exact plug.
Yeah.
And that was only happened in the last couple of years. That was a standards effort. Remember, everybody had different plugins forever.
I remember
forever.
That.
But what that means is that now USB power is 5 watts. It's 5 volts and 1 amp. That's this definition of it. 5 watts is about the same amount of energy as you'd use to run an old-fashioned Christmas tree light bulb on a string. 5 watts of power for the history of electricity was totally useless, except as an indicator light. But now 5 watts of power runs 1 billion phones, and 10 billion phones, and many other devices. And when we think about trying to get renewable energy out of nature, everybody builds power plants and hydropower plants and big solar things and wind turbines, and they're trying to get megawatts of power, lots and lots of power. But the definition of useful energy has changed. Now the definition of useful energy is what charges your phone. The other thing, the next of the big black swan events that's happened is the development of microfinance. Microfinance means that people buy their phones in places where they're very poor, but they pay for their phones on a pay-as-you-go basis. So every month or every week they pay a little bit to keep their phone going. And if they don't pay, the phone gets turned off. But because of that, in a number of countries, in particular in Africa, economies have started to get based on doing mobile banking on phones. And in Kenya, which has 44 million people, 95% of the entire economy runs over cell phones. And this is for people who have no bank accounts and they're illiterate, but they can operate a cell phone. And as a consequence of that, it means that poor people who live on $2 a day can now spend $1 a week to buy something. They never have $50 in their life at one time, but now they can buy a $50 device and pay for it $1 a week using their cell phone.
You know, there's an analogy to that. Back in the time of the Depression, When you talk about municipal bonds, the safest bonds are considered the general obligation bonds, which are backed by property. But during the Great Depression, the revenue bonds, which are considered less safe, are generate because revenue can drive up. The telephone bonds were the ones that always paid because people would rather give up their house than give up their phone. And now we're seeing that in the third world.
Right. And one of the things that's being financed by this method is small power systems like solar panels. Because people can buy a solar panel now, and they can pay for it $1 a week or $2 a week, and now they can buy a $100 system over the course of a year. And why is that important? Because of the other black swan, the third big black swan thing, which is LED lights. Now, if you think about LED lights, 10 years ago, they were very expensive. The price of LED lights has come down now so much that I can go on Amazon.com, and for $1.50 I can get an LED desk lamp that plugs into my USB port. But that's important to understand because of those 2 billion people that live without electricity, what do they get light for at night? They buy kerosene, or they buy candles, or they burn stuff. And that kerosene fuel is a huge part of their expense for daily life. Having no light means you can't work, you can't learn, you can't do anything. The sun goes down and you're in the dark. So solar panels that provide simple LED lights and that are paid for by microfinance are now becoming really common in certain parts of the world. And for example, in Kenya, where we're spending a lot of time focused on this, one company there called M-Kopa, it says that they're going to sell 1 million solar panels for $100 each in 2 years. To people.
How many?
1 million.
1 million.
For $100 each in 2 years, just in one country. Kenya has 44 million people, and they're only going to crack 5% of the market, and they're still going to make a couple $100 million. We have a friend in Bangladesh who's selling 80,000 solar units a month for $75 to $80 using microfinance. So when we look at those trends out there, the question is, okay, if you don't have sun, what do you do? That's what inspired me, because it turns out that in a lot of places of the world, the solar power is just not very good. I mean, the sun goes down, you have to have a battery, but there's places where, even in places like northern India, which we think of as being very sunny and full of very poor people, they have a 3-month-long monsoon season. It rains for 3 months, and the solar panels that they're buying don't work. And in other parts of the world, it's just cloudy. The African region has very long rainy seasons. So the solar doesn't work. So what do you do to get power instead? So that's what the Hydro-Bee concept is. It's got a little dynamo inside that soda can, and you can spin that dynamo with anything that moves. So you can attach it to a bicycle. You can attach it to a farm cart. We've designed it so you can put it on a pole and attach a wind propeller to it, or you can tow it behind a boat or put it in a waterfall and let the wind spin the water spin the propeller. Anything that spins that little shaft will run the dynamo. Dynamo charges the battery. Now you can plug your phone in. It'll also accept, of course, a solar panel. You can put, so with a solar panel and this device, you always have power, even if it's in the middle of the night and there has been no sun for weeks. So it becomes what we call an original equipment upgrade to all the people who have already bought a solar system. And that's where this model gets really interesting, because this is another of these the big black swan events happening out there, is that there are now distribution systems for all of these solar panels and for the financing of them already in place. I want lots and lots of people, hundreds of millions of them, to buy this little turbine for $50, and they can pay for it for $1 a week. And all of the distribution and financing, even in remote places, is already in place. And because we made it the size of a soda can, anybody that sells soda can move it around. And there's one other thing I want to mention, and this is about the spread of cell phone networks. This is a number that we just came across. The Global Cell Phone Associations say that by the year 2020, there will be 2 billion people living with cell phone coverage, but with no electricity. All of those people are going to be out there trying to power their phones. Right now, they're spending $30 billion a year paying cash, 10 cents at a time, to buy a little charge from somebody with a car battery. The numbers are just off the charts, gigantic, and they're just going to get bigger. Those 2 billion people are all going to be buying stuff. So the implications of that are phenomenal. We're seeing 2 billion people who have never been able to buy anything electronic are now able to buy things. That is going to drive massive manufacturing in the electronics sector and create millions of new jobs around the world. It'll create new logistics issues. Imagine how much product is going to move around the world to supply 2 billion people buying stuff for the first time. So when you talk about how there's going to be a boom in new growth, there you go, folks. It's going to be astonishing. We're talking literally hundreds of millions of tons of material in the next 10 or 15 years are going to be shipped around the world to these folks.
It's a brand new market. It's something that's untapped. It's just beginning. And as they begin to buy things and begin to come into the 21st century, they're going to be buying not just phones, they'll be buying a lot of other products as well.
That's right. And it's important to understand that these people use these phones as an economic tool. It's not just for calling people. What a farmer will do with a phone is he'll call around when it's harvest time and find out which market is paying the best price for his products at a given time.
And he never had that choice before.
Excuse me. That's right. And a fisherman who sails off the beach in his little sailboat every day to catch fish, he can use his phone to call the ports and see who pays the best price for fish. And it's a really big deal. Another aspect of how it'll drive agricultural productivity is that with solar panels that can be afforded by poor people, now they can run small refrigeration systems. And they can now have, for the first time ever, cold storage in their agriculture. Because what happens now? What happens now is all the mangoes come into season at the same time, and everybody goes to market with all their mangoes at the same time, and the price of mangoes crashes, and people don't get very much money. But they only have a week to sell it because the mangoes will rot. Yeah. And once they get cold storage, they can start feeding the product into the market slowly and make a lot more money. So these things that we're talking about are absolutely increasing the income of 2 billion people.
It's going to be fantastic. Bert, thank you for all these insights. Hydro-Bee seems like an incredible company. Thanks for being on the program.
Thank you very much. Anybody that would like to see the product and learn more about what I'm talking about, we've got a great website. It's www.hydrobee.com, BEE.com.
That's great. We're coming to a commercial break. Don't go away. I'll be right back. I'm going to talk about Russia and oil and what's going on. Be right back.
Lots of people manage investment portfolios. Just a few can manage a successful portfolio and provide exceedingly great service to their clients. Here's Mike Adams from Adams Financial Concepts.
We believe the price you pay should be based on the performance of your portfolio and the quality of service you receive.
You know, Mike, it seems that a lot of companies subscribe to the one-size-fits-all mentality of investing. Does one size really fit all?
Not with us. Every portfolio that we manage is customized to fit each particular client's objectives and risk tolerance. We place our client's interests first in all portfolio decisions.
If you're looking for a home for your 7-figure plus investment portfolio, call Mike Adams of Adams Financial Concepts, specializing in creating and maintaining wealth for over 20 years. 206-903-1019. That's 206-903-1019. Or log on to adamsfinancialconcepts.com.
Stop of your vacation.
About Money continues. Remember the website, adamsfinancialconcepts.com. Here's Mike.
So it's been just a year since oil prices began to drop. Last August, oil prices began to drop in a surprising way. Oil prices today hit the lowest they've been since this whole price thing began to drop at $43 a barrel. Astonishing. You know, and when you listen back then, when you listened to what was going on, people were just absolutely confused. You know, some said we're headed for a world economic disaster. I heard that repeated several times on CNBC. We're headed for a world economic disaster. That's why oil prices, that's what the drop in oil prices are telling us. Other people were saying, Demand has come crashing down. That's why prices are down. But when you look at it, the total consumption of oil tends to flow with the GDP. As country economic activity grows, so does the consumption of oil. That was not happening. We didn't see GDP take a dramatic drop. Most places, maybe in Greece, maybe in a few places like that, but overall, worldwide growth was increasing. It was not decreasing, did not show a drop in demand. Nor did we see a huge new supply of oil coming into the market that would depress prices. People were confused. People are still confused. I said back at that time, I had just finished reading a book, maybe a year before that or 6 months before that, a book called The Oil Kings, written by Andrew Scott Cooper. After getting the Freedom of Information Act, he had access to the private papers of Nixon and Kissinger and their dealings with the Shah of Iran. At that time, Iran was our ally. At that time, during the Nixon administration, we considered that Iran was our closest ally in the Middle East, and that the Shah was our buffer against the Soviet Union, that the Shah was on our side, and we were sending military equipment. We were building bases there, and the Shah was buying military equipment, the latest military equipment he could buy. He wanted to rebuild the Persian Empire, and he needed the military pieces to do that. But he needed a lot more cash than was being generated. So in a backroom negotiation between Kissinger and Nixon and the Shah, they began to raise oil prices. From a public standpoint, we looked at it as OPEC coming together and raising oil prices. No, it began in the back rooms with Nixon and Kissinger, and each year they began to push the price up, so that the Shah could buy more military equipment to install in his country to rebuild the Persian Empire. Or apparently to rebuild the Persian Empire. That was his concept of what he wanted to do, the Persian Empire that had stretched over all of the Middle East. That's the concept. The Shah wanted to make Iran a world power. And it was only at the point that he formed OPEC, and we formed OPEC, that it became really public about oil prices increasing. But it began in secret, out of sight of everyone. Now, how does that apply to last August? Think about it. There's two things that are going on. One, Russia has invaded the Ukraine. Russia has annexed Crimea, and the U.S. and European nations are putting sanctions, but they're not really that effective. And at the same time, you have ISIS, which has suddenly grown up in the Middle East, which is intending to topple a lot of the Arabic governments. So with Russia, half of their income, half of their revenues, the government revenues, was coming from oil and half was coming from taxes. So a sharp drop in the price of oil was going to put economic pressure on Russia. It was going to do significantly more than the sanctions were doing. It was going to put them into probably a financial crisis. At the same time, ISIS needed oil sales to finance their activities. So it became, in my opinion, a backdoor negotiation between Western nations and oil-producing nations to lower oil prices. For the oil-producing nations, it was to cripple ISIS, and for the Western nations, it was to cripple Russia. I believe that's still true. Even as the world demand for oil has picked up, prices are dropping. So is it working? Is it really working? There was an article out of The Economist this last week talking about Russia. Russia is a country with 200 different nationalities. It stretches across 11 time zones. Think of the U.S. We have 3 time zones. They have 11 time zones. Putin seems and is viewed by the world as expanding Russia to make it back into the USSR. He wants to bring all those broken up pieces back. And he called that the breakup of the Soviet Union the greatest disaster of the last century. And Putin is returning to the old central power and the central planning and control of the USSR. But the economists ask the question, could it be that Russia crumbles instead of expands? It wouldn't be the first time. In 1904, the Tsar was on the verge of a revolution, Nicholas II, and he targeted and sought out national traitors, what he considered national traitors, those that were against the Tsarist government. And he started a small war in Japan in 1904, thinking that that would divert attention from the government. They lost that war in 1905, and 12 years later, that group was overthrown and the Communist Party came into power. 1979, Afghanistan. Russia went to war with Afghanistan. The Soviet Union was struggling under its own central planning. Financially, they were struggling. They were being squeezed. Reagan had the idea of putting the financial squeeze. And that, of course, was before Reagan time. But Afghanistan was a war that the Soviet Union started to shift attention away from what was going on. They lost that war too. And 12 years later, the Soviet Union collapsed. So if you look at 2011, that was just a couple years ago, 4 years ago. If you remember what was going on in 2011, a lot of the middle income people were in the streets of Moscow and in the streets across Russia. They were taking to the streets to demand changes. During that time, Putin picked the alleged national traitors. Shortly after that, he annexed the Crimea, and then he started the war with Ukraine. Could the collapse be coming? Yes. The republics that were formed out of the collapse of the first Soviet Union in 1990, Ukraine, Georgia, Kyrgyzstan, Tajikistan, Turkmenistan, were not the only independent republics. You have Tatarstan, you have Siberia, the Ural, and you have other public republics that Yeltsin worked out a deal that gave them control. Putin has taken that away. What happens now? Will Russia collapse? It's very possible that those republics could force the collapse of the Soviet Union. One of Putin's deputies said, "No Putin, no Russia." The question is, will somebody remove Putin, or will the Russia come apart? Oil prices had an impact. The Russian economy is in negative growth. They're seeing their GDP drop, and financing is going to become more and more difficult. How that affects? It may not be the expansion of Russia we see. It may be a significant contraction. That's it for this week. Join me next week. We've got more things to talk about, and have a good weekend.
You've been listening to About Money with Mike Adams, a registered investment advisor. If you'd like more information about what you heard today, or about Mike's investment philosophy and strategy, or if you want Mike to evaluate your own portfolio, click on adamsfinancialconcepts.com. That's adamsfinancialconcepts.com. The information shared on the preceding program was for educational purposes only, and any investment advice given may not be suitable for all investors. Join us again next Friday afternoon at 3 for more About Money with Mike Adams, here on Money Radio 1300 KKOL.
The preceding program was sponsored by Adams Financial Concepts. Creating and maintaining wealth has been the specialty of Adams Financial Concepts for over 20 years. Every portfolio managed by Adams Financial Concepts is customized to fit each particular client's objectives and risk tolerance. The client's interest always comes first in portfolio decisions. Call Mike Adams today at 206-903-1019 or log on to adamsfinancialconcepts.com to check out their AFC performance. They welcome your review. That's adamsfinancialconcepts.com.